Hello and welcome everyone to Almus Market Mornings, your daily dose of global financial updates. Eventful day for our domestic markets yesterday. RBI's MPC rate decision was yesterday. To cover that, we have our own money market pundit, Mr. Pankaj Rathi, who will take us through the implications and key takeaways from the RBI's policy. Now, the RBI hiked its repo rate by 50 basis, which was in lines with what our in-house market expert JK mentioned on yesterday's market mornings. With this, India has joined 50 other central banks, including the US Fed, to have raised rates by at least a half a point in one move this year. Pankaj, good morning. Rise in repo rates, estimates of GDP, all of this was discussed by the governor yesterday. Take us through the numbers and other global updates you have for us.
Uh, Thanks a lot. Thank you, Swaraj. Good morning, everyone. So the game of front loading on the interest rate cycle is going on, and RBI is also a kind of a preempting Fed in thinking that whatever amount they will be raising, we should be raising before that. That's the clear thought process going on. MPC decision to hike policy rate by 0.5% from 4.4 to 4.9% in repo rate was just par for the course and the perhaps a well discounted one. A lower rise would have meant RBI was behind the curve, but stretching up to 0.75% as some predicted would have set some more panic in the markets. They dropped their long-standing phrase that future policy would remain accommodative, reinforcing expectations of further rate hikes and other forms of tightening in coming months as fighting inflation becomes its main focus. Now, CPI inflation forecast raised to 6.7% from 5.7% earlier now looks more realistic and give a sense that where the rates should be headed by the end of FY23, which look like that we will be ending FY23 with a 6% kind of a repo. So still 120 basis point more from here to go, anywhere between 575 to 6%. While retaining growth rate of a rate at 7.2% may be seen with some kind of a doubt, though it is lower than the many other analysts' forecasts. Even more rate hikes on the cards and its impact on business. RBI governor also highlighted that 75% of incremental inflation, which was they have whatever the inflation number they announced last time, the 75% of incremental inflation would be coming from food. All in all, a policy that did not raise a whimper, with stocks looking a bit weak, assessing the impact of rising financing costs, and bond yields were steady, having already priced in 50 basis point rate hike in the event. 10-year GSEC yield closed 3 bps lower to 7.49, and 1-year OIS closed 8 basis lower to 6.22%. For the rupee, this ranked one of the least eventful policy day, with high and low range of a 15 paisa, featured once again by market buying and central bank selling. Rupee yields getting more attractive did not matter for the market at this point of time, which is focusing more on unrelenting global crude oil prices and worsening external macro balances. Global stocks were in a sideways to weaker zone, caution ruling ahead of a CPI data and the Fed meeting outcome next Wednesday. Meanwhile, there is an ECB policy meeting event today, which the result will be announced at 5:15 p.m. Indian time, to be followed by a presser by President Lagarde, where the ECB bond buying program is likely to end and an indication of a rate hike in July, possible up to 0.5% may be seen. Inflation in Eurozone had been as much of a problem as elsewhere, but their policy response has been too slow. Market expects a rate hike by ECB in July meeting, but in our view, there is a possibility that we can see a 25 basis rate hike today itself. This will catch the market off guard and might help Euro on a firmer footing. Meanwhile, Germany 10-year yields have jumped to the highest level since 2014 ahead of the meeting. US dollar has resumed its bullishness, having rallied more than 1% of its corrective low of 101.30. Most of the dollar strength has come from a USD JPY, which actually has now traded a 20-year high at 134.50. Their silence gives doubt that now they have been closer to an action in the market. Yen weakness is actually leading other currencies in Asia to weaken like yuan and Korean won. Yen has already seen a depreciation of 35% nearly since March 2020, which is very large and is driven by the deliberate policies of government and Bank of Japan. But this is likely to evoke protests from US sooner or later. Brent crude oil near month futures are dealing at USD 124 per barrel, which is just sort of important resistance of USD 125 per barrel. It looks like that it might break on a higher side. USD INR is likely to open at rupees 77.73 and expected to deal in range of 77.60 to 77.85. Today also, USD INR will be testing the central bank reserve. That's all from me. Thank you.
Okay, thank you, Pankaj, for taking us through the updates. So, as he mentioned, 50 basis was well discounted by the market. And of course, there is an increase in inflation forecast. We have ECB policy meeting today, which is an important event, and there are event risks associated with it. Keep managing your risk, everyone. We'll see you all tomorrow. Goodbye.